Okay, good afternoon, everyone. I'm Juliana Kennedy. I'm a CPA, and I'm going to be doing this live broadcast for you. Feel free to put any comments that you may have if you're joining me live in there so I can answer them for you um, with this presentation. So I'm trying to find a way to help those of you who follow me about accounting and taxes in the USA, and also accounting software like the Quickbooks and then the Waveapps. Today, I'll be talking about the advantages of investing in real estate and the tax system and how it works. I'm also going to show you the form if you're in the USA, the form that the deductions are on, and tell how most real estate investors end up not paying any taxes. I'm not trying to justify anybody's position, but I just want to know, I just want to show the rest of us um, that this is how they are able to get away without paying taxes. And most of it is legal. So I just want to put all of you on the same platform as them. Even if you don't have a whole lot of money to get into buildings and stuff, you can still do a little small, like a little 1-bedroom condominium. You can start with that. And I'm also going to talk about it. So I'm going to try to do maybe like an hour, and it's all going to be up here for you to digest however long you want. I'm going to also be sending it to my YouTube channel. I'll break it up. So by topics, I'll try my best. And so you can watch it anytime you want. And so let's dive right into it. So I'm going to attempt to show my screen. Most people have heard about the real estate advantage. So let's go here. I'm going to show you the Schedule E. So this Schedule E here, and again, this is mostly for USA, the Schedule E here. If you can see, I don't know if I can zoom in on here, maybe not. So over here, it tells you all the rents that you're going to be getting. So for example, I use ordinary numbers just to illustrate what I'm trying to tell you. So you have here, if say you have a unit and it's only $1,000 every month for rent, so you'll be getting 12,000 for the year. This is just a small example. Mind you, every expense that you spend to promote the property or keep the property in shape is all deductible. All these expenses here, and I'm going to try to go through most of them. For example, you advertise in a newspaper to get the unit rented. All that is a write-off, all right? You have a vehicle, if you were using a vehicle for that, or maybe you're driving back and forth and you keep track of your mileage for you going there to visit the property, things like that, that is a write-off. Meals and entertainment, if you were to have a meeting with the tenant or something. And again, the meals part and some of the entertainment, they all have limitations. So you have to be very, very careful with that one. I won't do too much of it. Cleaning and maintenance. If you can have somebody clean it up, maintain the outside of the whatever condo, building, however many you have, all those is a write-off. Commissions. So most people tell me, I'm working a full-time job, I don't have time to monitor my property. You can hand it over to a management company. So if there's a plumbing problem, they call them, they don't call you. But what happens is that most of them will take, say, 5 to 10%. You can get some that will take only 3%. And then they will handle all the tenant issues for you. So you don't have to worry about it. Those are commissions here. You can, or management fees, management fees. And if somebody else gets it rented for you. You can also pay them commissions. There's insurance, any insurance you have on a property. Legal and accounting fees, professional fees, all comes out. Now, the qualified mortgage interest, so if you own your own home, you have the mortgage interest where you take it out of on Schedule A. For the rental property, you take it out on here as well. And so over here at the interest, repairs, you have a line here, supplies, real estate taxes. Now, the biggest benefit of a real estate investment is the depreciation. So what it is a lot more extensive than I can go over in this slide, but what it is that a piece of the cost of the mortgage that you have on a property, you are being allowed to write off each piece every year. Depending on the type of property, it could be over 27 and a half. It could depends. I don't know what you have or what you are involved in, but please get a CPA involved when you're making your decision. So a piece of it every year gets written off. Now, that is not something that you're physically shelling money out. So if you get 12,000 and you get all these expenses plus this is this example, rough example, plus all this deduction. So in that case, in most cases, it will create a loss for you.